Imagine trading with $200,000 in your account. In this lesson, I'm gonna give you the exact blueprint that my students have used to pass funding challenges with ease. Like Mustafa here, who turned $200 into $200,000 in funding. Or even Chris Stanley, who became a six-figure funded trader in just 2 weeks. Or even Samudin here, who recently made 12k from his 100k funded account, and many others. So, I'll break down the steps that you need to follow, from meeting the requirements, passing the tough evaluation process, to managing the money effectively, so that you not only make some real money consistently, but you also scale your trading to the next level. So, grab a notebook and let's dive deep into it. So, here's what you'll learn in this ultimate course. Firstly, introduction to prop firm trading. This is where you will learn the basics. What are prop firms, which prop firm to use, whether you should even use prop firms. I'm going to show you the pros and cons of prop firms compared to trading with your own capital. And then, once again, I'm going to give you the 7-figure funded blueprint. Like, people are literally paying 6 figures, millions of dollars in order to access this, and I'm going to give it to you for free, right? You will learn what you need to pass funding challenges, the tips and tricks, and also our 7 figures funded strategy that have gotten so many of our students funded, and how to maintain and scale your funding, right? Remember, you don't just want to pass funding challenge, you want to get paid. So without further ado, let's jump straight into the basics first. So you go onto the community, you see our students sharing their certificate, their funded certificate. They are getting their first payout, second payout. They're making thousands of dollars. And you sit there wondering, what the hell are these certificates? Why are they getting so much money? And it's all because of prop firm. Alright, hear me out. Alright, I'm just gonna explain everything from the start so that you, as a beginner to prop firms, will understand how the entire process is gonna be like. First of all, you need to understand that in trading, you need money in order to make money. I know this might sound obvious right now, but most traders, they don't really understand this. They still think that it just comes out from thin air and just like fall down from the sky magically. No, you need money in order to make money. Which means that if you are trading with a $100 account, how the hell are you expecting yourself to make $5,000 tomorrow? It doesn't work that way. Or if you are trading with $5,000, how can you expect yourself to make $50,000 tomorrow? Once again, doesn't make sense. You need a large amount of trading capital in order to get a large amount of profits if you are trying to follow the risk management rules. So most traders, they suffer this tragedy called undercapitalization. And it basically means that you lack sufficient capital. That's what it means, right? Very simple. Most retail traders enter the market undercapitalized, which means that they don't have enough trading capital to trade with in order to make a living from trading. Example, today you venture into trading and you have quit your job. You want to pursue this full time. Now, remember, you still got your bills to pay, you still need to pay your mortgage, you still need to put food on the table, right? So, if you are trying to make a living from trading, you should be at least earning $5,000 to $10,000 per month. At least, if you want to make a living from trading. And you cannot make $5,000 or $10,000 per month if you are trading with a $100 account. If you are trading with a $1,000 account, doesn't make sense whatsoever if we are trying to follow our risk management rules, which is risking no more than 1% per trade. And right now you are trading a $100 account. That means if you risk 1%, that is what? $1. And you are potentially risking $1 to make back $3, $5. How are you going to make a living when you are trading with such a small amount of money? Doesn't make sense whatsoever, right? That is why I say that most of you guys are undercapitalized. Most of you guys are broke, right? That's the cold hard truth. If you are broke, then you are expecting yourself to generate consistent income as a full-time trader. It's not gonna work out. As a result, they end up taking on excessive risk on each trade in order to get big returns, right? Next thing you know, you are trying to flip this $100 to $1,000 because you need to pay your mortgage. And as a result, you put on like a standard lot size, right? You put on a trade that is way too big for your account to handle. Or because you are focused on flipping the account, you're trying to make as much money as possible. Now, if you're able to trade with a larger capital, it'll be so much easier for you to follow your risk management rules. and as a result, trade with more peace of mind, right? Just think about it. If you are trading with a $100 account and you are risking 1% per trade, that is $1. If you are trading with a $100,000 account and you are risking 1% per trade, that is $1,000, which means you go potentially make $2,000, $3,000, $4,000, $10,000 on a single trade. And you can see the risk management rules is the same. We are still risking 1%. It's just the difference in the account size. You are trading with a larger capital. As a result, you are able to make a larger amount of profit. It also allows you to endure losing streaks and give you a higher chance of surviving long enough so you can actually experience those winning streaks, right? When you are going through a slump, a bad week, guess what? You're gonna take a bunch of losses. And if you are trading with like a $100 account and you are over risking, you're over leveraging, it's gonna take you like a few trades and then you're gonna blow the account. Right, so having a larger capital allows you to really have more room to play with. And as traders, like I said, we want to play the long game, right? We want to focus on capital preservation. As a result, then we can finally make profits. Yeah, so having a large amount of capital gives you more room to breathe and it gives you more safety net, so to speak. So a proprietary trading firm is basically a company that provides capital to its traders in exchange for a percentage of the profits that they generate with the company. Example, if a prop firm gives you $100,000 to trade with and they ask for a 60-40 split, that means they could potentially take 40% of the profits that you have made and then you get to keep the remaining 60%. That's what it means. So examples of prop firms are Funding Pips, Alpha Capital Group, FundNext, and FTMO. And once again, there's a lot of prop firms out there. There is potentially like 50 more or something. 50 more prop firms out there to trade with, right? But these ones right here are the ones that we personally recommend, the ones that our students most commonly use, right? FTMO, FundNext, Alpha Capital, these three actually, right? So if you have to choose one, if you are asking me for a recommendation, I would say go with FTMO because this is always the most legit, is the most well established, and is the most trustable and safe one that will not go wrong. Yeah, so FTMO. So the rise of prop firms lately have allowed retail traders to gain access to a large amount of trading capital from $10,000 to over $400,000. Yes, you heard that right. You could potentially trade $500,000. Or they can even scale it up to $1 million in trading capital. Imagine trading with $1 million, right? If you risk 1%, that is what? How much is that? Is that like 10,000? Yeah, that's like $10,000 per trade. Yeah. So yeah, really, by having these prop firms, it's kind of like a blessing in disguise, in a sense of the fact that yes, it's providing all these retail traders with a large amount of trading capital. But the thing is, these prop firms, if you want to join them, it's not easy. I'm going to explain more about the rules later on. Right, obviously the prop firms will not give you the money immediately because you have to prove your worth by showing them you actually know what you are doing before they will entrust you with a large sum of capital. Right, they are not stupid. They are also investors. Right, they also want to make money. So that is why when you join them, right, they expect you to be somewhat profitable already so that you can actually generate profit and then they get a percentage of the profit split. Therefore, you will be put onto a test before you can officially join the program and receive funding. Right? You have to go through a test, not just one time, but 2 times. Once again, I'll discuss more about this later. Right, for now, let's just quickly look at some pros and cons of prop firm. Right, so the pros is obviously more capital equal more profits. Right, like I said, trading with a $100 account, compare that to trading with a $100,000 account, you are definitely going to make the more amount of profits because you are risking more amount of money. And there is limited downside because for prop firms, right, when you lose money, you are not liable or accountable to the losses. That means that you will not lose $5,000 or $10,000 on your trading capital. No, it's their capital that you are losing. And it doesn't really affect you whatsoever. They are not going to come after your ass and sue you whatsoever. No, they are liable for all the losses, right? So that gives you a limited downside. The only risk that you have is the upfront fee, right? The upfront fee, which I'm going to talk about later. Lastly, access to useful resources like courses, journal, and tracker, right? You are able to get access to cutting edge technology where you are able to track all your trading data, all the trades that you have taken in one place. Yeah, so this is very useful as well. Now the cons is obviously the upfront fee, right? So when you join the prop firm, right, actually before you officially join them, you have to pass a test. In order for you to even qualify for the test, you will be required to pay a small fee, right? So example, a small fee could be, okay, if I want to get $100,000 funding, I need to pay about $1,000, okay? That's just for me to enter into the test, not even for me to pass the test and receive the 100K. No, just for me to enter in the test. So if I fail the test, I will lose the $1,000 that I gave them. If I pass the test, they will refund me the $1,000. So technically it's kind of risk-free, right? But obviously there is always the risk that you are going to lose the fee if you are a bad trader or you are not consistently profitable and you just end up breaking their rules. Once again, we'll discuss more about this later. And there's an increased pressure from hitting the profit target. Yup, you heard that right. There is a specific percentage, or rather a specific target that you need to hit every single month. Lack of stability, since you can lose your funding if you break their rules, right? At any point of time, they have the power to actually remove you from the program and take away your funding, right? If you break their rules, you lose too much money, you underperform, they will just take you out, right? So there's lack of stability right there. Okay, if not, let's go and learn more about the rules of prop firms and how it actually works. And we are going to look at FTMO because that's really the most trusted prop firm out there right now. Okay, so you can just search Google FTMO, just search online and then you can just find the first option. This is it, right? So yeah, once again, it has been established for over 10 years now, right? Almost 10 years right now. So yeah, master of trading skill, blah, blah, blah. Okay, cool. Let's scroll down and let me show you guys what we got right here. These are the trading objectives that you need to meet. First of all, you can see, you can choose the balance, right? How much funding do you want? Do you want $10,000 in funding, or 25K, or 50K, or 100K, or 200K? You can choose them, right? Obviously, you can see the refundable fee that I'm talking about, the upfront fee that you have to pay them in order for you to qualify for the challenge is gonna increase the higher you go, right? So you can see 10,000 is about 89 euros, 200,000 it's 1,080 euros, 100,000 is about 540 euros. Right, so yeah, I can see there's different price point for different funding. Obviously, 200K, it requires at least 1,000 bucks. Is quite reasonable, honestly. Yeah, but let's look at this. By the way, you can change the currency right here as well. Right, let's just stick to USD. Okay, cool. So let's say today you decide to get funded with 100K because you want to be a 6-figure funded trader. All right, so in that case, first thing you need to do is to go and buy the challenge. Right, so you go here, start FTMO challenge. And bam, you'll be directed to like some sort of checkout link where you have to check out and pay them 540 euros. Once again, this is not so that you can get the 100K. No, this is just for you to qualify for the challenge. If you pass step 1 and you also pass step 2 and then you become an FTMO trader, that is when you finally get access to this 100K. Okay, so let's go through step by step. Let's look at step 1 first. Okay, so after you pay them the 540 euros, you will be given MetaTrader 4 login details, or MetaTrader 5, right? Login details, you type in your password, all that stuff, and you will be required to actually connect your MetaTrader 4 to their broker. Once that is done, that is when you can start going, right? Start attempting the challenge, right? So that is the first thing that you need to do, is to attempt the FTMO challenge, right? So during this challenge phase, once again, the trading period is unlimited, right? Which means you have as much time as you need to reach your profit target, and the profit target is basically this one right here. So in order for you to move on to the next phase, you need to make $10,000. So if you look at this, this is 10% of 100K, right? So if you are thinking in terms of percentage, your goal is to make 10%. And once again, they didn't limit the amount of time, right? They give you that breathing room. Last time, we didn't have the breathing room. Last time, if I was going to get funded, right, I needed to make $10,000 within 30 days, right? So nowadays, it's like much more easier, right? But now, yeah, unlimited. Like I said, you can take as much time as you need to reach your profit target. Okay, cool. Okay, next is the minimum trading days, right? 4 days, right? You must trade for at least 4 days during the current duration cycle. At least one position must be open on each of these days. A trading day is defined as a day when at least one trade is executed. If a trade is held over multiple days, only the day when the trade was executed is considered to be trading day. I believe this is very self-explanatory. You basically just need to take a trade for 4 days, and it doesn't have to be in a row. It can be like any 4 days. Next is maximum daily loss, right? So this one is, there's a little bit of formula behind it, right? So your maximum daily loss is 5%, right? You can see 5,000, that is about 5% of your initial account balance. Yeah, so this is the formula. Results of your close position of the day plus the result of open position. This is very important. A lot of traders neglect this. Right, now here's an example right here. Initial account balance 200k, max daily loss limit is $10,000. If you happen to lose $8,000 in your closed trades, your account must not decline more than $2,000 this day. It must also not go negative $2,000 in your open floating losses. And this includes commissions and swap. Now, you can see, very important, it doesn't just include the closed trades. Right, so in this case right here on the 100k account, let's say you lost $4,000 today, and right now you still got 2 trades open right now. Those 2 trades, it cannot go into a drawdown of more than $1,000. Right, that means it cannot go into negative 1,001, 1,002. Once that happens, bam, you're out. You're out of the challenge, and you lose your refundable fee, and you fail this challenge, and yeah, you are out. Yeah, so that is a rule, and they also mentioned that, okay, if you profit $5,000 in 1 day, then you can afford to lose 15k. So you can see, the profit, whatever you have earned, it gives you the extra buffer to play with. Yeah, but once again, just to remind you, max daily loss counts your open trades as well. By the way, this one resets at midnight, yeah, Central Eastern Time. Yeah, so take note of this. Okay, so that's the maximum daily loss rule. That is why inside the capital management module, I asked you guys to risk 0.5%, right? When you risk 0.5%, it's much more easier for you to actually pass this challenge compared to risking 1% because you have more room to play with, you have more buffer. Okay, next rule is maximum loss. Bear in mind, this is maximum daily loss, right? So this is the maximum amount of money that you can lose on a particular day within 24 hours itself, before the midnight Central Eastern Time. Okay, next is maximum loss. Now, as for your maximum loss, this is the total amount of money you can afford to lose during the entire duration of your challenge. Okay, basically your account balance, right? It cannot go below $90,000. That's it, right? That's the bare minimum, right? It cannot go below $90,000. Once you go below $90,000, you are out of the challenge. Yeah, so that's for maximum loss, right? Once again, this one very self-explanatory. Yeah, the equity must not at any movement during the account duration decline below 90% of the initial account balance. Right, you can see, yeah, 100k, the lowest possible equity is 90k, right? If you go below 90k, no go. And once again, this is also including the open position as well. Same thing as the max daily loss. It takes into account the drawdown as well, right? How you calculate this is the same as the max daily loss. It's just that this one is not limited to 1 day, but the entire duration of the testing period. Yeah, once again, it includes the commissions and swap. And yeah, next is the profit target, like I mentioned, is 10%, right? So you need to achieve 10% in the challenge phase, right? In order for you to move on to the next phase. Yeah, so you must make $10,000 in profit right here. Okay, after you complete the first test, let's say magically, miraculously, after you have followed our mechanical trading plan, you have used our exact funding blueprint, right, to get funded. That is when you pass this first phase, you made $10,000 and you move on to the next phase. Before I move on, I just want to point out the fact that for the profit target, right, different prop firm have different profit target. In this case, FTMO requires you to make 10%. But right, when you go on to funded next, another prop firm, and you scroll down, you can see that this one, the profit target is 8%. That's the difference. You can see different prop firms have different profit target. FTMO require you to make $10,000, while Fundnext required you to make $8,000, 8%, right? And you can see the minimum trading days is also different. Once again, different prop firms have different rules, all right? Take note of that. Okay, if not, just get back to this. So yeah, phase 1, you have made $10,000. Congratulations. But that's not the end. That's only the beginning. You move on to the next phase, step 2. This is the verification phase. Once again, if you look at the rules, it's the exact same rules as step 1. And it's just that now they make your life easier by requiring you to hit the profit target of 5%, right? So instead of 10%, You just need to repeat the same thing and just hit a profit target of 5%, right? And once you're able to hit that profit target of 5%, that is when you finally pass phase 1, phase 2, and you move on to get funded. And that is when you will gain access to the $100,000 in trading capital. Cool, congrats. Now you're an FTMO trader. Your job right now is to maintain consistency, is to maintain that funding and not lose your account. Because bear in mind, there is still certain rules, right? There is still the $5,000 max daily loss. There is still the $10,000 maximum loss. If at any point of time you break either of this rule right here, you are still going to lose your funding. Once you have made it past these two phases, right? Your refundable fee, this fee that you have paid them at the start, it will be refunded to you. Yeah, you heard that right. So you pretty much got this entire challenge for free. Now, for the mindset part, I just like to split the two things, right? Confidence and discipline. You need the confidence to execute your trades without hesitation, reservation, or fear. That's very important. And how do you gain that confidence? It only comes from competence. When you have a proven edge that actually works, you have back tested it, you have forward tested it, you have tried it on your live account, then we know that it works. Yeah, so once again, actually go through this inside the systems and processes module, we talk about how to back test, forward test, everything. Yeah, so that is how you gain confidence. Like I said, you will not get confidence by shouting affirmations in the mirror, or even by reading the Alchemy Yourself 2.0, right? You will not get confidence by reading, oh, I'm a professional trader, oh, I can make money, trading is easy. It doesn't work that way. You need to put in the work, and that's how you really build confidence. Next is discipline. As for discipline, I like to split it into 3 ways. Discipline is important, not just when you are trading, but before you trade, during your trade, and after you trade. So before you trade, you need the discipline to go through your trading plan, right? Go through rule by rule. And then you also need the discipline to actually create the trading plan in the first place, or even decide which trading session to trade and stick to it. And then when you are trading, you need the discipline, or rather the patience, to wait for price to get to your point of interest, your supply and demand zone, wait for price to sweep liquidity, right? To tell you some sort of signs that the smart money, the financial institutions have entered into the market. Very important. So yeah, and after you trade, the discipline to journal your trades, right? Journal your trade, review and record your trading data, find out what works, what doesn't work. So these are the 4 main things, right? Like I said, you need to have every one of these. If you don't have any one of this, don't try to get funded, all right? Don't try. It's just you wasting your refundable fee. And it's not cheap, right? You know, let's be honest, $600 is not cheap. For me, I failed like 4 funded accounts in my first 2 years before I finally passed one. Yeah, and then once I passed that one, I lost it like within 1 month. Yeah, so funding challenges, it's not easy, right? By no shape or form is it easy. It's very difficult, honestly. Yeah, but like I said, if you follow this blueprint, it will work. Okay, next is tips and tricks to achieve funding. Now, here's just some tips. Like I said, purchase a funding account with a refundable fee that you can afford to lose. So, like I said, man, if you cannot afford to lose $600, maybe try to get a 10K account, or even a 20K or a 50K account, right? Which costs like, I don't know, a few hundred or less than $100. Yeah, and only take high probability setups and always look for confirmation. So let's say price is going up like this. And then first things first, identify what phase of the market is in, right? Is it in a pullback phase or is it in a continuation phase? So after a break of structure, we know that price will start pulling back. We don't know where exactly, but we know it's going to happen soon. And what I like to do is just look towards the left side of the chart, see if there's any unmitigated supply or demand zone. Okay, once we see price entering into the zone, anticipate, not really anticipate, but kind of like know that price could potentially pull back soon. Okay, so now we know that price is in a pullback phase, right? So like I said, it's very simple. It's either in a continuation phase or the pullback phase, or it's just like a consolidation where price is going sideways, right? There is no alternative. It can't fly, it can't do anything else. It's just up, down, sideways. That's it. Right? Identify the trend direction, mark up your market structure, do a top-down analysis, mark up your point of interest. The next step is to just wait for price to get to your point of interest. Right? Depending on what type of trader you are. Are you a scalper? If you're a scalper, then in that case, you will be analyzing the charts on the 4-hour, the 4-hour and the 1 hour, and you will be marking out your point of interest on the 15-minute or even the 5-minute. And then you wait for price to get to your 5-minute or 15-minute point of interest, and then go down to 1 minute to execute your trades. Basically, once you mark out your point of interest, you just wait for price to get your point of interest. That's my plan, right? So for me, I'm mixed between intraday and swing trading, right? So I'll just mark out my point of interest on the 4-hour, the daily, and even the 1 hour time frame, and then I'll set alerts,
right? You know, TradingView got a function to actually set alerts at what price point you want price to go to, and then it will trigger the alert, right? And then it will send you a notification in SMS or email. Yeah. So set alert at a point of interest and do nothing. Do nothing. Go about your day. Go gym, go interact with your family. You must understand that why do you start trading in the first place? It's for freedom. You are not here to stare at the charts all the day. I mean, you can do that, but I believe Sanjeev will know that it's disastrous to do that. You make money in the Asian session, you give back the profits they will make in the London session, and then New York session you lose even more money. So it's about finding the sweet spot, right? So like I said, I always preach that just focus on one trading session, be it London, New York, or Asian. Yeah, so once price get to the point of interest, TradingView send me an alert. Okay, cool, Brett, go and analyze the charts. All right, cool. It's usually around London session, I'll get the alert. Right? If it doesn't happen, if I don't see my trading opportunity during the London session, I don't trade. Yeah, I don't trade. What if, you know, price doesn't reach a point of interest during the London session and it reaches during your New York session? Cool, you can take the trade. But for me personally, I don't do it because I like to stick to my plan. And another thing is, like I said, you just need data. If you have the data to actually back up that, okay, London session and New York session both works fine for you, then you can do that. Like, I can say, okay, yeah, just take the trading in London session, but doesn't make sense for a swing trader. You know, you're a swing trader, depending on what time of the day, maybe the price goes in the point of interest in the Asian session. It'll be kind of stupid to not take the trade as well. If it works for you, right? Yeah, like you're taking a swing trading approach, you know, price doesn't really go to your point of interest in the London session, even though your plan says that you should trade the London session, I will advise you, why not trade both or do what you do. Basically, wherever price gets to your point of interest, you enter the trade. Do that for 1 month. Build the data. Right? Once you got the data to actually back up that, okay, that actually works, then yeah, stick to it by all means. Yeah, because the thing is, everybody's trading approach is different, right? There's no one size fits all when it comes to trading. Once price gets to your point of interest, you know, your alert sets off, what next? You look for your entry model on the lower time frames, be it the 15-minute or the 5-minute or the 1-minute, whatever time frame that you're entering the trade on. Look for entry model. For me, this is where I get my confirmation. Now, remember, once price gets to my point of interest, I don't want to enter yet because there is a chance that it is not a high probability point of interest and there's a high chance that it might fail. Price will just blast right through it. So that is when you guys learn about risk entry and confirmation entry. Risk entry is you place your limit or order at the point of interest. Once price steps into that, you are inside the trade. Confirmation entry is you wait for price to get to the point of interest and then you still wait for your entry model to form before you actually get in for the trade. Confirmation entry will always give you a much higher win rate because you get the extra confirmation. Yeah, so as for the confirmation, once price gets to a point of interest, you look for an entry model. There is 3 confirmation I'm looking for. First things first, market shift. Market shift is goddamn important. I can't emphasize how important it is because it shows you that there is a shift in order flow of the market. Whether price is going from bullish to bearish or whether demand have stepped into the market or supply is still overpowering the market. Market shift. Second thing, liquidity. I need to see some sort of liquidity sweep. And when does liquidity sweep usually happens? Either the London Q zone or the New York Q zone, either of these Q zones. Yeah, so that is when you are able to find the most amount of trading opportunity, especially if you're scalping. Yeah, so those are the 2 main confirmation. For now, it's just liquidity and market shift. And as for the entry model, I believe you guys have seen the 6 entry model, right? That's like the flip zone, the flip plus sweep zone, yeah, all that stuff. Yeah, I'm not gonna bore you guys with the details. Okay, so yeah, that is what I mean when I say high probability setup. High probability setup is basically a setup that aligns with your trading plan. And for me, I sometimes like to add the extra criteria where I have to look for confirmation. Next is fully accept and embrace the loss or risk, including the challenge fee. What does it mean to fully accept and embrace the loss? I believe Sanjeev talked about that a lot just now, yeah. You gotta fully accept it. No, it's not just about knowing that losses are good. It's about really accepting the fact that you will suffer losses. It is inevitable. Even professional traders, hedge funds, they still go through losing streaks. They have down months, they have down quarter. It is completely normal. It's really what you do during this losing streak. Because the hard part about losing is that when you lose, you're not just losing your own capital. You are losing a little bit of your confidence to execute the trade. That is why after you lose a bunch of trades, the next trade you see that lines up with your trading plan, you don't take it because you feel like this fear, this hesitation, you know? The solution is very simple. Every single trade idea is not related. If you flip a coin, you will never ever know whether it's going to land on heads or tails, right? You never ever know the sequence of the trade outcome, whether the next one is going to be a win or next one is going to be a loss. So what you can do is to just execute your plan. And if you have back tested it, you know, you have like a solid win rate, right? Like 70, maybe not 7%, but like 30% to like 70% or 80%, that's good enough, right? You know that you will be profitable in the long run. So that is where you really fully accept and embrace the loss and the risk, because you know that every single loss takes you much closer to a win. Next is journal every single trade, both loss and win. Yeah, just journal, honestly, just journal. Like I said, it's really building the data. And just think about how good it will be 3 years down the road. You look back on your trading journal and you see like the stupid beginner mistakes that you committed 3 years ago. It's a gorgeous feeling, right? Sometimes when I look back at my trading journal, I see notes from like 2021, 2020, and it's me like over trading, revenge trading, and emotion trading, and all the stupid beginner mistakes. And I just look back and just appreciate how far I've came. Because like right now, I know that I don't feel these emotions anymore. And that's the thing about emotions. You start to get numb to them when you have been trading for so long. You start to get desensitized to the numbers, the profits, and the loss that you see on the screen. Okay, cool. If not, we can get back to the funded strategy. I've drawn a little diagram right here. Now, what this diagram shows is that, okay, right now this is where it starts, right? If you join a prop firm, you want to get funded with 100K, 200K, whatever it is. First phase is usually the funding phase. Yeah, funding phase. And then next one is the verification phase or something. Yeah, but anyways, first phase, you are required to reach a profit target of 10%, right? Which means you need to make 10%. And right now, there is an unlimited amount of time for you guys to reach that profit target. Back then, we didn't have that privilege. We have to reach 10% in 30 days. Yeah, that was at quite a few years ago. Yeah, so 10% unlimited time, right? The key point is unlimited time. That means you don't need to rush, right? Be very patient, wait for price to reach your point of interest, execute. Okay, so this is the strategy. In order to reach the 10%, like I said, it's not easy, right? It's very difficult to actually reach 10%. But like what I said in self-transcendence, your paradigm literally dictates everything, right? If you think it is difficult, it's going to be difficult. If you think that trading is a scam, you're going to self-sabotage yourself. If you think that trading is easy, you'll put in the effort to actually do it and learn and master the craft. So it's all about the paradigm. Like I always say, your belief leads to your actions, and your actions lead to your reality. Yeah, so paradigm very important, but most important is really the strategy. So for this funded strategy that you will learn, it doesn't require you to have a high win rate. You don't need to have like a 80% win rate or 90% win rate. You just need like a 30 to 40% win rate, right? Which means out of 10 trades in a row, you're winning about 3 to 4 trades. Don't need high win rate. So it's very doable for each and every one of us here. So the minimum of R multiple on each trade is 1:3. I would actually recommend you guys to strive for at least 1:3. But aim for 1:5. Always aim for 1:5 risk to reward. Never settle for 1:3. But this is really the bare minimum, right? Like if you have no choice, 1:3 is the bare minimum. Very simple, right? We do this because we always want to ensure that we are getting back 3 times more, 4 times more, or 5 times more on what we are risking. So first things first, you have your strategy nailed down. Like I said, before you get funded, make sure you test your edge and really make sure that you have a proven edge before you even try to get funded. But once you got that sorted out, next is the risk management. Once again, this is where majority of traders fail, right? They are not able to nail this part down right. So this is where I want you guys to risk 1% until balance gets to 98K or 105K. Okay, there's a rationale behind this. It's going to make your life a lot easier. Like I said just now, we will suffer losses. It's part of the game. You cannot avoid it. You will suffer losses. Let's say the first trade that you take, you're unlucky. Or maybe you were disciplined. You execute your trade, but you still suffer some form of losses. So you lost the first trade. All right, cool. So you're down 1% on the first trade that you take. Okay, cool. Do you give up? No. It's part of the process. We have learned that, right? So what happens next is that, let's say you still are going through a slump, like a losing streak or something. You lose another 1%. Okay, now remember, every time you lose, it's harder to get back to break even. It's always going to be harder to get back to break even. Okay, so you lose 1%, you lose another percent. Okay, cool. Now we are at 98K. Now we have lost 2% of our trading account. This is where you start to de-risk. You decrease your risk from 1% to 0.5%. Now, the reason why we do this is very simple. Remember, this is your room to breathe, right? This is essentially the amount of bullets you have. If you risk 1% per trade, you have 10 bullets before you get out of the challenge. So once we get down to 98K, right, let's just put this negative 2% right there. Start to de-risk, right? Start to de-risk and drop your risk down to 0.5%. So instead of risking 1% per trade, you risk 0.5% on each trade. Okay, cool, 0.5%. Next trade, bam, you still lose it, right? You seem to be going through this slump, you don't really know what you're doing. It's okay, it's okay. We can recover back from this because right now you're only down negative 2.5%, right? And it's recoverable, right? Negative 2.5%, we can recover it with just one trade with a 1:3R. This is why we do what we do. With just one trade, you're able to get back to break even and actually get a little bit of profit, 0.5%. So, I believe if you use our trading strategy, you have lost 3 trades in a row, you are most likely gonna be more cautious on the setups that you take and you start taking high probability setups, right? You finally start to get your shit together and start taking high probability setups. As a result, the next trade, you risk 0.5% because we have de-risk, remember, we have de-risk. So, you win the next trade. Okay, you win the next trade, so that's about 0.5%, and it's 1:3. Yeah, it's 1:3, so it's 1.5%. So right now you make about 1.5%. You went from negative 2.5 to negative 1. What do you do right now? Right now the balance is 99K. You go back to risking 1%. Because as long as it gets below 98K, you de-risk. But right now we are back to 99%, so you can risk 1%. Let's say for some reason you risk 1% here, it doesn't work out. You lost this rate, right? So negative 1%, now you're back to negative 2%. Okay, it's cool. You're back to square one, right? You're back to negative 98K. Same thing. Continue to de-risk. Back to 0.5%, right? So we're back to 0.5%. Let's say we want the next trade. Okay, this is like a hypothetical scenario. I think this is a very realistic scenario because you're not going to win every trade, but you're also not going to lose every single trade. Like any guy can just click the buy or sell button and start winning a bunch of trades. Yeah, you don't even need to have a trading strategy. That's just how mind-blowing trading is, right? So let's say, like I said, you have a solid trading strategy and you decide to win the next trade. So right now we are at negative 98K, risking about 0.5%, and we get back to 99K. Okay, cool. Get back to 99K, and now you start gaining your confidence, your motivation, your ability, your morale back. Okay, cool. At this point of time, right, you have to take 5 trades. Let's look at the win rate of this. 1, 2, 3, 4, 5. You know, 1, 2, 3, 4, 5, 6. Okay, we take 6 trades. What is the win rate? Okay, we lost 1, we lost another 1, we lost 3, we lost 1, 2, 3, and then we won 1, and then we lost 1, and we won another 1. So we won 2 trades. Yeah, and then we lost 4. Like I said, 33% win rate, right? That's what we are aiming for anyways. Next trade, you win the next trade. So, like I said, back to 99K, you are risking 1% right now. So you make about 3%. Okay, 1%. Okay, so you're at 102K. So about 2% right there. Okay, cool. So right now you are at 102K. You're up 2%, but you cannot increase risk rate yet because, like I said, only increase risk once you reach 105K. Okay, once again, next trade, let's say you're on a roll, you win the next trade. Okay, cool. Right now we are at the 5% mark. Now, okay, this can happen in a lot of ways, right? You can lose the next trade and then go back down, but just stick to the plan. Like literally, once price get below 98K, de-risk. If not, just continue risking 1% until you reach about 5%. Okay, so let's say the next trade you got lucky and you win the next one. 2%, you make about another additional 3% because you get a 1:3 risk to reward, right? And now you're at 5%. Okay, now you're up 5%, but the profit target is 10%. In the first phase, it's 10%, the verification phase is 5%. If you are in the verification phase, congratulations, you are funded. But you are in the first phase, which means you need the 10%, right? So now, to make your life simple, this is where you can start increasing your risk from 1% to 2%. And I put here, optional. It's completely optional. It's really up to your risk tolerance. If you want to do this, you're feeling a bit of risky, you're feeling a little bit of adventurous, do it. Right? I will actually recommend you to do it because What happens when you increase your risk to 2%? You win the next trade. You pass the challenge. You pass the challenge just like this. That's why I always say, you're one trade away. You're just one trade away from winning the trade. Yeah, okay, once again, this is something optional, right? If you don't increase your risk, let's say, you don't have to, by the way, right? Like, you continue risking 1% and you make about 3% on the next trade, right? And this is if you are just getting 3R on each trade. I believe you can get 5R, 10R. We see some people got 1:50R. I can't do it either. For me, it's like I need to gain it out. For me, the max is like 10R. Yeah, so we get back to this. Let's say, like I said, you don't follow this. You just continue risking 1%, so you cover this. You just continue risking 1%. Okay, it might take you a little bit longer, but like I said, what if you get 5R? What if you get 5R in the next trade? Like I said, you aim for 5R, right? You pass the challenge as well, right? You risk 1%, you make 5%. So yeah, I'll leave it up to you, optional, but I will actually recommend you to do it because it makes your life much more easier. Cool, so that's for the first phase. That's the 10%, right? The first one. The next one is 5%. Dude, the next one is 5%. So use the exact same strategy. You don't deviate from your plan. Your plan works, just stick to it. The verification phase is the same thing, right? It's just that it's the exact same rules. It's just that the profit target is 5%. Yeah, so I'm not gonna go through it again, but yeah, you get the gist of it. Just stick to the plan. Okay, now once you get funded, right, you pass the first two phases, you're officially a funded trader, and you do have 100K in your account or 50K, whatever. What's next? Let me tell you something. This is only the start. Do not get complacent, do not get overconfident, and start taking a bunch of low quality trades. Continue to be disciplined, continue to follow your trading plan, continue to do your pre-market, post-market, and your market routine, right? Continue being disciplined. Very important, because if not, at any point of time, you can lose the funding. Your job right now is to maintain your funding, right? Is to ensure that you don't break any rules that will actually cause you to lose the funding. And also, you are not, like aiming for unrealistic returns. A lot of new beginner traders, what they do is that after they get funding, they try to aim for the moon and try to get 10%. Because if they make 10% on a 100K account, that is $10,000 per month. And that's the magical number, right? We all want to make 10K per month. Now, do not be pressured to do this. Because if you do that, right, if you try to rush it and you try to make 10% within 1-2 weeks, you are going to be prone to taking a bunch of low quality trades, and then you're going to lose, and then you are going to draw down. And trust me, going to a drawdown on a funded account, it is not fun, right? At this point of time, your sole focus is capital preservation. You should not be worrying about making a shit ton of money. No. You should be focused on not losing any money, all right? So at this point of time, like I said, your job is to maintain funding. Don't break any rules, right? Respect the drawdown, reduce your risk exposure, and I will advise you to aim for plus 5% return per month, right? Don't need to aim for 10%. No. Just aim for plus 5%. This is very realistic and this is very possible. I've done it. The coaches have done it. Students have done it. Very possible, right? So if you think about it, right, on a 100K account, if you make 5% per month, that's an additional $5,000 in income. And that's on top of your current job. Right now, maybe let's say you're working and you're making $3,000 per month. If you make 5% per month, that is $5,000 in additional profits. Right? So that's just something good to have, right? Don't need to aim to make 10K per month, right? I would say the problem with this is that, like I said, you are going to be more emotional. You are going to deviate from your plan more because you're obsessed with the money. When I always say, focus on the process of becoming a good trader. Because what happens when you become a good trader, when you become a better trader, that is when you can start to scale your account, all right? That's why I say, if you want to make more money, right? You want to make 10%? No. The problem is not with the returns. It is your capital. You are still considered as undercapitalized. If you are trying to make 10K per month, in that case, you need to focus on getting more capital rather than risking more per trade or aiming for unrealistic returns, right? So in this case, let's say this is your first 100K account, right? And then you find that, $5,000 per month, that's not enough. I want to make 10K per month. I want to scale, right? In that case, don't worry about that first. Maintain your funding, right? At least try to be consistent on this existing funded account for a few months, right? 2-3 months before you attempt another 100K challenge,
right? And what I would advise you to do is to reinvest your profits, right? Take the profit that you earn from this funded account, the payouts, and go and purchase another funding account. That is when you can really start scaling your trading account, right? So once that is done, you purchase another 100K account, and then you pass the 2 phases because you follow our risk management strategy, you follow our mechanical framework. Bam, you got 200K in your account right now. I mean, you have 2 different 100K funded accounts. So you are managing about 200K in total capital. In this case, if you're making 5% of 200K, guess what is that? That is your magical 10K per month, right? So you can see, you're still aiming for 5%. It's just that you have more capital to play with right now, right? And you're also disciplined, right? Because you don't need to rush to make 10%. You just need to make 5% on both of these accounts, right? So that is really when you can start scaling, right? And then eventually, you scale all the way up to having 400K in capital. The best case is having 2 million in your trading capital. But let's say you really become a professional trader, right? You know what you are doing. You have good risk management rules in place. You have a proven profitable trading strategy. You are consistent. Then you can slowly start to scale to 400K. Like I said, when you're in doubt, just follow the timeline that I gave you in the previous lesson, right? The funded roadmap. Yeah. So eventually you scale up to 400K. And you make 5% on 400K, how much is that? That is $20,000. Additional $20,000 per month, bro. At this point of time, you are eventually like 6-figure trader because $20,000, and if you make that over 12 months, I don't even know how much is that. That's like 240K. Yeah, and if you make 10K per month for 12 months, that is a good 120K. So if you can just make 10K per month, right, you are essentially like the top 3% of traders already, right? Yeah, like I said, man, 5% per month on a 100K account is good enough, man. That's like $60,000 a year, bro. That's like additional income. So please, guys, do not focus on, making unrealistic returns because, like I said, yes, you can make 10%, right? This might just be a limiting belief. You can make 10%, but know that it's going to be very difficult to maintain making 10% per month every single month. It's going to be much more easier to make 5% per month every single month. And also, last thing I forgot to mention, right, is to have a buffer of 2 to 5% that you leave in your account so they can take losses, right? Because like I said, when we are funded officially, we want to focus on capital preservation, which means we don't want to risk too much on our trade. We still want to continue risking 0.5 to 1% per trade, continue doing that. Just that right now, we don't have to increase our risk or whatnot so that we can pass the funding challenge because we already got the funds, right? In this case, your focus is to not go below this black line right here. So when you do make profits, right, let's say you're up about 8% over the span of 2 months, right? So this is month 1 and then this is month 2. Now you're up 8%. Do you want to withdraw all of these 8%? You can, right? But if you do that, bear in mind, your account go back to 0%, right? And it's going to be easier for you to drop into this drawdown. Like I said, this is the zone that we don't want to enter. In that case, what I recommend you to do is to have a buffer. What I mean is that if you're up about 8%, maybe go and withdraw 3% of that profits. And then you leave another 5% remaining in your account so that your account balance is 105K at all times, right? So that you can take a few hits before you drop down to the drawdown zone, right? So yeah, that's something you can do, have a buffer. Once again, this is completely up to you, but I would actually recommend you to do it. Because if you want to maintain your funding, don't withdraw everything that you have made, right? Leave it to compound also as well, and also leave it to have some sort of buffer, right, that will protect you, that will shield you from the losses that are inevitable. Because like I said, eventually or at some point of time, you might encounter a losing streak. If you withdraw all your profits, you go back to 0%, guess what? The losing streak is going to cause you to tremble down and it's going to be quite difficult to recover psychologically, right? Because this is really like real funded account. This is no longer like a challenge account or a verification account. No, this is actually a funded account. So your trading psychology is going to be a little bit more tough. So now you know the roadmap to becoming a 6-figure or even a 7-figure funded trader. But remember, it's not just about passing a challenge. It's about getting your first payouts. It's about mastering the mindset, controlling your emotions, and staying disciplined when the stakes are high. That's what makes trading so difficult. Which is why in the next video, I'm gonna show you how to think like a professional money manager. How to master the mental game of trading and conquer greed, fear, overconfidence, and doubts. The emotions that are holding back 99% of traders and preventing them from reaching their fullest potential. Now, if you follow these steps that I just shared with you you have a proven trading strategy, you stay focused and you keep improving, I guarantee on my non-existent stock life that you will get funded. So if you need a profitable trading strategy, you can check out this video right here where I reveal to you the 3-step smart money trading strategy that banks don't want you to know. And as always, remember, you are just one trade away. Mwah.